Hey guys, this is Mubashir, and today we are going to analyze what's happening currently in the market. I mean, you know that there is lots of geopolitical tension which is going around, especially in the USA, Iran, and Israel, right? That causing there is a huge gain in the oil prices because of all that those things. The stock market is continuously going down, right? So basically, I'm planning to tell you step by step how this oil prices, how this war is impacting overall over stock market and even gold. Right? You know that in this kind of market scenario, normally gold rises, right? But at this point of time, the gold is continuously going down. So basically, we are going to cover all these things. Right? So let's start the video. Right now, a war is building between Iran, Israel, and the US. You know that, and most people think this is just a geopolitical news, right? But if I show you, I mean, you may have also checked the Nifty 50 charts that is continuously going down. If I talk about the Sensex, let's Nifty 50. Let's check the Nifty 50 chart. Right? It's been like, if I'm not wrong, it the war was started around from 1st of March. We can say, right? If I take that as a starting point. Okay, 1st of March. Look at this. Okay, from here we can take this level. Okay, from this level, if I tell you, the market is around down by the around 11%. So you can understand it has created very huge impact. Right? The market initially was in consolidation phase here, but now it is continuously going down because of all these oil prices and geopolitical tension and tariff things, rupee depreciation. Right? We are going to cover each area. Right? So, uh, if I tell you, this war can directly impact your petrol prices, inflation, and even your stock portfolio, right? I mean, you know that it is already impacting your portfolio, right? Especially mid cap and small caps are impacted too much because of this oil prices and geopolitical tension. In fact, some stocks can fall sharply, while others can become multi-baggers like defense stocks and stocks which are related to the like oil prices because they are earning well because of increase in the prices of oil. Right? So in this video, I am going to break down the complete chain reaction from step by step from global war to your portfolio. So first, war leads to increase in the oil price. I mean, whenever there is a tension in the Middle East, the first thing that reacts is crude oil prices. Why? Because you know that because this region controls a huge portion of the global oil supply. If I talk about the Strait of Hormuz, you know that it is control around 20 to 21% of oil prices, right? If I just show you crude oil, yes, yes, crude oil. Here it is. Look at this. So now again, the easier will be money control. Let me show you what's happening with the crude. Just okay. It is okay. So, uh, as I told you, this like Middle East controls around we can say 20% of sorry, Strait of Hormuz control around 20% of overall global oil supply, right? So you know that they have Iran has recently announced that they are closing the Strait of Hormuz and they are only allowing I think China to pass on that, right? Because they have very good relation with that. So that the that disruption in the oil supply creates a very huge concern for overall global economy, right? So even if the actual supply, uh, if I would say that if they are not going to close, if they have just said that, even If the supply is not disruption, market reacts to fear. You know that the market pricing everything, right? So, and because of that fear, oil prices start rising. So the first step is simple: war or tension. Fear is in supply, oil prices go up, right? So, in the second thing, if I talk about why it is impacting Indian stock market too much, right? And what's the reason behind that? Here you can see that currently the oil prices is around 113, right? You can see that has increased sharply. Let me show you. You can see that. Look at this chart. Right? So why it is impacting Indian market, right? Why the market is continuously going down? Right? India imports around 85% of it is crude oil. That means when oil prices go up globally, India has no option. We have to pay more, right? We have to pay more. And here where the chain reaction begins. I mean, oil prices increases, India imports bill increases, right? Import bill increases, demand for the dollar increases, and that leads to, let me show you, dollar again. Hmm, again, you can see that. Look at this chart. You can clearly understand what's happening. I mean, for the 1 month especially, we checked it from 90 rupees, 90.5, you can say 90.8 to 94 weekends. It is a very huge concern for India, right? We are the major importers, right, of oil, crude oil. So, and the when the rupee weakens, everything become expensive. So now we have like war is leads to oil goes up, that leads to import costs up, and that leads to rupees down, and that leads to inflation start rising. And if inflation rises, interest rates goes up, and that is going to impact the market, right? I mean, now if I say inflation is you know that inflation is where the things get serious. I mean, when inflation rises, the RBI cannot ignore it, right? They have to control it. So RBI may increase the interest rates, right? And when the interest rates goes up, loans become expensive, EMIs increases, spending reduce, and when people spend less, companies earn less, right? Which directly impact the stock market. So now the chain becomes like inflation up, interest rates goes up, consumption goes down, and that leads to the corporate's profit goes down, and that's going to impact the market, right? So if I would tell you about the industries, even sectors that's gonna impacted more, and they are going to go down more, and there are some sectors that's still going up, and they are getting benefit from this one. So sector that depends heavily on crude oil will suffer, right? For example, if I would talk about the aviation companies, because there is a fuel cost increases, paint companies, raw materials come from the crude, right? FMCG companies, it is impacted because of the transportation cost and all. So their margins is gonna get hit, right? So if I talk about the winners, the companies that produce oil like upstream oil companies actually benefit from higher crude prices, and also obviously defense sector can also benefit due to the rising global tension. And if I talk about the FIs and the market sentiment, you know that FIs are the one who shake the market whenever they take out their money from any market. If I talk about the emerging, especially emerging nations, whenever there is a global tension happen, they try to manage their risk, and according to that, they take out their money from, uh, especially from the emerging markets. And you can see here. Let me show you. Mm, FIS and AIS activity. Actually, if I talk about the previously, they were continuously taking out their money as well. And if I talk about the nowadays, come to know that. Okay. See. you can see that they have taken out their money around 7,000 500 crores, and on 19th of March and 20th of March 5,500 crores. That's a very huge amount. You can see the figures here, right? And they are continuously taking out their money from India. You can see that continuously they are taking out their money. So that's also impacting the market, right? Because if I talk about their impact, right? uh, they start taking out their money from emerging market, and they try to save, they put their money in the safer asset like US bonds or the gold. And because of that, the Nifty faces pressures, mid cap and small caps fall even more. So even if Indian fundamentals are strong, global fear can still impact your market, right? So that's all the all things which have covered. If I talk about the uh, uh, micro level, what's happening in the micro level, like this is where the most people stop, but this is where smart investor go deeper. I mean, at the company level, companies that depend on imports will suffer. Companies with a strong pricing power will survive. Export oriented companies can actually benefit due to the weaker rupee, right? Because they have to uh, they are exporting, right? They are going to earn more on each dollar. They were initially earning like 90 rupees, now they are earning around 94 rupees for each dollar. So if I talk about why the gold is continuously going down, right? I mean, usually you have saw that whenever the market, sorry, whenever the market goes down, whenever the overall geopolitical tension happens, the gold goes up, right? But this time, gold is continuously going down. If I talk about the, like, let me show you gold. What's happening in the gold? Look at this. Gold has dropped too much, around 4.45%. And if you see Nippon, India, gold is. It was down around, if I'm not wrong, around 10% in the morning. Yeah, now it is quite recovered. Now it is 7.62%. Right. So yeah, it is going continuously going down too. So the main reason is, first of all, why the gold is going down. The reason here, let me tell you, is that the gold is priced against the dollar, right? And dollar is continuously staggering. So whenever the dollars goes up, the sorry, whenever the dollar goes up, gold prices goes down. Whenever the uh, dollar goes down, gold prices surges, right? And also there is a profit booking, right? Because of this recent rally and global, there is a loss of global volatility which is happening around. Also, silver has a crash around 15,000 today, right? So that's the reason the gold is continuously going down too. So I think for the gold, you can take the advantage of this normal, and you can buy more for your long-term investment, for the safer side. Right? And that's all for the today's video. I mean, let's see where this tension goes. Right, as you can see, when the war started, the oil goes around, we can say 170 $20 per uh, dollars for the crude oil, and now it is around, we can say, yeah, 140. I think the chart is showing wrong. I think I have selected the that's the different chart which I'm talking about. Yeah. So if you all want to for if I would tell you if it is a good time to buy or not, I would definitely going to say that it is a very good time to buy. I mean, whenever the market goes down, as a long-term investor, it is an opportunity for us to buy more, right? Especially all these small caps, mid caps are not trading at their very fair valuation or at the discounted price. So I am not saying that at this point of time the market is not going to down more. There is a chance, there is a very high chance that the market is going to go down more, but we have to take the opportunity, right? First of all, I'm not a SEBI registered research analyst, as you can see with my analytical skills and all. So that's all for the today. Thanks for the watching. Have a nice day.